Good morning, students. Welcome to our LVRC classes. Right now, we are dealing with the subject of cost accounting or cost and management accounting. And today, the topics that we are going to take up for revision includes the topic of unit costing, batch costing, job costing, and also the topic of cost accounting. Now, in this, the first topic that we are covering, that is unit costing, batch costing, job costing. This was addressed in our previous lecture also when we were dealing with cost sheet, because the cost sheet for this particular unit, batch, job is in the same format. Same format means since these are different approaches for costing, these are different methods for costing, we have to select the appropriate method which is suitable to a given case, to a given business, to a given product, and accordingly, we have to do the costing. Now, in this particular case, today we first start with a very important question in your costing, that is identifying the correct method of costing. Now, all these are different methods of costing, the job costing, the batch costing. It is important to understand when which method is applicable. So, whenever you are a single product company, that is, you have only one variety of product, only one range of product, then the method adopted by you is called as single or output costing or even unit costing. Then when you have multiple range of products and they are all standardized products, like examples are car manufacturers who have standard models of cars, or laptop manufacturers who have standard models of laptops, or even FMCG products like our wafers, biscuits. All these products come under that category where you have standardized products, but you have multiple range of products. Now here, either process costing may be applicable if these products are made in different stages or processes. If not, then the method of costing which is applicable is batch costing, because these products are made in batches. So first you make batch of one particular product, let us say 1 lakh units. Then you'll go to the batch of another product of 50,000 units, then a batch of third product of 2 lakh units, and so on. So accordingly, we have batches in which production is carried out. So we do costing for each batch. That is how you have the other method, which is batch costing. And the third method, which is applicable, is where you are doing costing basis the order received. Received means whenever you are doing costing, means whenever you are doing production, not of your own products, but of the designs which you have received from some other company, and basis the design, the specification given to you, you are doing your production. In that particular case, what you are said to do is you are said to provide job work, or you are said to be in the jobbing industry. In this particular case, you need to do costing of each job, each order received. In such cases, the method applicable is the cost sheet method for job industries, which is the job costing method. So depending upon the nature of your product, depending upon the nature of business you are into, you have to decide one of the methods of costing. So let us take up that question as our very first question today, as to identifying the suitable method of costing applicable to these different cases. So you have one question in front of your screen. I give you a minute. You have to tell me for which of this particular case, which method of costing shall apply. So you can put me answers in the chat box. 1, 2, 3, 4. So there are 4 different scenarios given. For each scenario, you have to give me the answer as to the suitable method of costing which is applicable. done? Should we take up the answers? Yes, very good morning, Bida Sabrinath. So you have to give me the methods of costing. Okay. Balamurgan has given me one answer. Yes, others, what are your answers? Yes, students, what are your answers? Which I think I have stopped sharing. Sorry. Yes. Okay. So students' answer is as rightly given by Balamurgan. So the first is job costing. So for this particular case, the method which is applicable for costing is job, because you have to ascertain cost of each job separately. Then when you are doing work where the work is involved in stages, in steps, in processes, the method applicable is process costing. Then when you make groups, groups means batches, and then you treat each group as one unit of cost. That is, you are doing costing for each group, each batch, which becomes batch costing. And at times, in certain products, you have to combine two or more methods like batch plus job, process plus job. So where two or more methods are combined, it is called as a multiple costing. So if at times you have to combine two or more methods of costing for one product only, it is multiple costing. So this is the answer for this particular question. Now let me take you to a cost sheet. This is slightly lengthy cost sheet. And in this cost sheet, now see, normally in cost sheet, what we discussed in the previous class also, you will have raw material, you will have direct labor, you will have direct expenses, prime cost, factory overheads, administration related to production. Then you will have again administration, which is general, and you'll have selling and distribution. And in between, you'll have some pointers. Now, in this question, we also have the R&D cost. So many times you have this particular separate element of cost also given, which is the R&D cost. So that is also covered in this particular question. So this is, I found as one of the most comprehensive questions. So I decided to take it over here. Asta is asking, sir, what is different between unit and job? Yes, Asta. See, I explained at the start. When I'm making only one product, like go 25 years back, there was a product called as Nirma. I don't know whether it is available even today also. But in Nirma, they manufactured only one product, Nirma. And there was no other product also. And within Nirma also, they did not have variations. Like today, if some companies manufacturing Surf Excel, within Surf Excel, it has Surf Excel Matic, Surf Excel Super something. But at that time, that company was making only one product, that is Nirma. So it did not have multiple products. It did not have variations in that product. So it was a single product company. So when you are a single product company, you have to do costing of that one single product only, which is called as unit costing or product costing or single output costing. These are the parallel names. Whereas when you receive the orders from other companies, let us say I'm Mahindra and Mahindra, I'm making Mahindra and Mahindra car, SUV. For that, I require multiple parts and components. which I get it made from people like you all who are into different products manufacturing. Now here, I will give you the work order of making the steerings for my vehicle. Now, I also have multiple vehicle models. Plus, there are other companies for whom you are doing the same steering manufacturing. But every time you will receive a different shape, size, design of that steering, which depends upon my requirement of the car. So if my car is small, I may have a compact steering. I may have a round steering. I may have, if it is a sports car, I may have a stylish steering. So depending upon the specification, the design I have given, you will be making the steerings for me. That is what is job costing. Fine, beta? Now, students, this is the most comprehensive job costing sum I have found. So I've taken it over here for our practice and revision class. Kindly go through this and just mark where each of these items will fall in the cost sheet. So you have raw material consumed as one category. You have then factory overheads, you have that R&D related expenses, then you have your administration, you have selling and distribution. Go ahead. You have to do marking. So see, this will come in raw material consume. This is also raw material consume. This will be direct wages. This will be direct wages. Now, higher charges paid for hiring of specific equipment. This will be direct expenses. Now, power and fuel. Now, for power and fuel, there are two possibilities. If the power and fuel can be identified with that particular job, it will be called as a direct expense. If it cannot be identified with a particular job, it will go to factory overheads. So I'm considering it as not identifiable with a particular job, hence it goes to factory overheads. Then amount paid for purchase of molds patterns life is equivalent to 4 years. In this case, firstly, since you have paid the whole amount for the molds and patterns which are to be used over a span of 4 years, you'll have to divide it by 4 years so that you'll find out what is the apportion amount for 1 year. So first point is you have to apportion it over the life of 4 years. First point. Now second point is where it will fall. Again, the same answer like power and fuel, depending upon whether it is identifiable with a particular job or not. Now, generally, molds are identifiable because for different jobs, you require different molds. Hence, it is more suitably classifiable under direct expenses. Now, when you get certain work done from outside, which is job work, it is always a direct expense for you. Now comes lease rent for your production assets. So it is factory overheads, then depreciation on factory building, factory overheads. This is administration overheads. This is again factory overheads. This is selling and distribution overheads. Salary paid to supervisors is factory overheads. Repair maintenance for machinery is factory overheads. Of sales office building is selling distribution overheads. Then insurance premium for plant machinery is factory. Factory building is factory. And for stock of raw material and WIP, that is also factory overheads. So insurances of these things are falling here. Now, expenses paid for quality control, all this comes in R&D and Q&A category. Salary paid to, so it is again R&D and Q&A category. Research and development costs, again R&D, Q&A category. Then administrative work, expenses paid for administration of factory work. This is administration overheads. Salary paid to functional managers for production control, administration overheads, selling and distribution overheads. Salary paid to general administration overheads. Packing cost, primary packing necessary to maintain. This will come after factory overheads. And for redistribution of finished goods, which is the secondary packing, this will come in selling and distribution overheads. Again, fees paid to auditors, is administration audits. Fees paid to independent directors, administration audits. Then you have stocks. So raw material will go in RMC. This will come when you are calculating factory costs, and this will come when you are calculating cost of goods sold. Same thing will be for closing stock. So RMC, factory cost, cost of goods sold. Now, due to delay in picking up cargo from the port, the company had to pay 15,000 as demurrage. Now, see, demurrage is like a penalty because you have got late in clearing your cargo. So this is a penalty incurred by the port authorities because you are using their port beyond the specified time. Now, in this particular case, what is the treatment in costing? Now, see, in costing, whenever first check, is it incurred in the normal course? Is it something which was expected, or is it something which is abnormal, unexpected? If it is abnormal, it will not be considered in costing. Now, generally, you will not expect that you will be late in clearing it. This happens in some exceptional circumstances that you do not clear it in time. So this will go to cost P&L and it will not be charged to product. So it will not be part of your cost sheet. So students, I found this comprehensive question. So I thought I'll take it over here for your understanding. So this is how you will place it in your cost sheet at different places, and you will be able to derive the various cost related to various heads. So they have asked us to find out cost under what heads: prime cost, factory cost, cost of production, cost of sales. So I'm sure after classifying it, you will be able to place it in a proper sequence. As we know our sequence, so this is the sequence. So it is RMC, direct labor, direct expense. This gives you prime cost, then factory overheads, then R&D and Q&A. This total gives you your factory cost. Then administration overheads related to production. This is cost of production. Then you adjust opening, closing, finished goods. You will get cost of goods sold. And then administration general and selling and distribution overheads. You will get your cost of sales. So we know the sequence. We have done this sum in the previous class, also the cost sheet format sums. So this is a more comprehensive one covering various items. Remember one thing, students, in certain sums for few of the items where there are two answers possible. Like here, when we were discussing, we had this particular expense, which is power and fuel. We had this particular expense that is molds and dyes. So in such cases where there are two possible answers, you should write a note that we are assuming that this is the situation because nothing is given in the question and hence this is the answer. So students, I hope this particular sum is also clear and I'm sure you will be able to do it in this particular format, in this particular sequence. So most important part in such lengthy sums is identifying the correct category where that particular item of expense can be classified. Is this clear, students? Should we proceed? Now, I would like to take up this particular chapter a bit in detail because this will require time and this is an important chapter for exams. So, cost accounting system. Just a minute, I'll open a sheet so that I can write it in that sheet and help you understand. In the meantime, students, if you have any doubts, questions, please feel free to ask. Okay, so let us go to solving of this part in our cost accounting, that is cost accounting systems. Now, students, many times I have found that students find this cost accounting part slightly difficult. I think maybe because of two reasons. One, because slightly right from our 11th standard, we are not very comfortable with the accounting entries, the debit and credit maybe. And secondly, because there is a change in the names with which we may not be comfortable. So in first 10 minutes, I would like to revise the cost accounting part so that once the names, the accounts, the entries are clear, then we can take it up with practical sums. Now, see, in cost accounting, you have mainly five expense accounts. So, what are those five expenses? I'll first give you the general names and then I will later on shift it with the technical names. So, first is you have account for your material cost. Then for wages and salaries. Now, see, these are our general names with which we know these accounts or these expenses. And then the three overheads, production overheads, administration overheads, and last is selling and distribution overheads. Now, besides these expense account, we have three different accounts for every product. Keep this in mind. For every product, we have three different accounts. Now you'll say, sir, why we have three different accounts for every product? The reason is a product, while it is getting complete, is in three stages. First, when the product is under manufacturing, that is when it is in the factory, we represented by the WIP account. So what is a WIP account? Just keep in mind for your reference, it is till the product is in the factory. So whatever you do in the factory, that will be booked here in WIP. Now, once the raw material is converted into final product, your product is ready, production is complete. The product goes to the second account, which is the finished goods account, which you can just keep in mind as your go down. So just visualize that your products are now completed in the factory, the manufacturing process is complete, hence the products are now in your go down. So WIP, then finished goods. Now, once these products will be sold, they are sold to whom? To customers. So when these products are sold and they are delivered to customer, that is shown in your cost of sales account. Correct? And then finally, you have the cost P&L account as your final profit and loss account. Now, students, these are the accounts which are required for passing cost accounting entries. Now, first understand the accounts with their names. So first account is for the material cost. Now, this is the name by which we understand. So right from day one of costing, when we started understanding costing, we understood that there are broadly three types of expenses: material, labor, and expense. And then depending upon direct and indirect, all the indirect expenses are classified as overheads, and then overheads are further classified as production, administration, selling, right? Now, when you're doing cost accounting, you have the same expenses, but with slightly different or technical names. So this expense, which you call as material, right? Just keep in mind this is material, but it is called as stores ledger control account, in short SLC. So in our words, what is material? Material expense or material cost is in cost accounting called as the stores ledger control account. First, be comfortable with this name. Then the second is what we call as wages or salaries is called as labor cost control account. So in our words, it is wages salary. In the words of cost accounting, it is labor cost control, for short LCC. Now, all these accounts are named same. There is no change in the names of overheads account, just you add the word control. So this will become production overheads control. This will become administration overheads control. And this will become selling and distribution overheads control account. So these are all called as control accounts. That is the only change in their names. What is the main change is the the materials and the wages. So material will be called as stores ledger control. Why? Because till the raw materials are used for production, you keep it in stores. That is why they are called as stores ledger control. Just give me a minute, students. Okay. So just be comfortable with the names. The moment you are comfortable with the names, then you have to be, or you will go to the second step, which is again technical part, that is understanding the entries. Now, when it comes to all these accounts, work in progress, I've already given what this account represents. So while your goods or your products are under manufacturing, so they are in the factory. Again, here we use the word control account. So, but remember that while the product is under manufacturing, so just visualize in your company, there is a factory area, there is a production area. So what all things will be there in the production, that will come in WIP control account. Then once your production is complete, where will the goods be lying? Your finished goods, they will be lying in your godown. So it will be called as finished goods control account. So you can just call it as WIPC, FGC. These are just the short forms for quick remembrance. And then when these goods are sold to your customer, they are shown in the cost of sales account. Now, importantly, you will say, sir, in our accounts, customer is the debtors account. No, this is not your debtors account, because in debtors account, you show the sale value of your products. However, here we are showing the cost of the goods sold. That is why the name is COS or COGS, cost of goods sold. So whatever goods you have sold, see, out of stock, so entire stock may not be sold. So this is the stock account where whatever goods are lying in stock is shown. But once the goods are sold, from here they will get transferred to the cost of sales account. This will represent the cost of those goods which have been sold. So just for your understanding, I've written here customer, but does not mean debtors. Correct? Now, till this point, now students, as far as cost accounting is concerned, these accounts are sufficient to do cost accounting. However, whenever we are doing accounting, we follow the double entry concept. But here, with these accounts, the double entry is not getting fulfilled. So, to complete double entry, we require what? For example, when you will be purchasing material, you will debit this account. So this account will be debited with what? Like, see, in simple words, like in your normal accounting also, if you purchase material, what you do? You debit purchase account. Here, stores ledger is representing material. So whenever material will be purchased, you will debit here. But what do you credit in your regular accounting? So we credit our creditors. We credit cash bank if the purchases are made for cash. Correct? On similar lines, here also, I need those creditors accounts. I need the cash bank account. But as of now, whatever accounts I have drawn, these accounts are missing. Similarly, when you will pay wages, when you will pay your overheads. Now see, there are two parallel words. You can use the word pay or you can use the word incur, because in sums these words will be used, pay or incur. So just keep these words in mind. So either you pay these expenses or you incur these expenses. Correct? Whatever word is given. Now the point is, you debit these respective expense accounts. See, these five are expense accounts and you should always write it first. So that is why also psychologically also you'll understand that, okay, what we are dealing. So these five are your expense accounts. You debit them whenever the expenses are incurred. But you have to credit what? You have to credit cash, bank, creditor, which is missing. Similarly, we also require accounts like debtors account. We require accounts like fixed asset accounts. In other words, what is missing are your assets and liabilities. So what is not yet drawn over here is your assets and liabilities. Now, to complete double entry for some transactions like the purchase transactions or the transactions of incurring expenses, for these transactions, my double entry is not getting complete. Now, for completing double entry for these transactions, I require these assets and liabilities account. Over here comes the two methods of cost accounting. So in cost accounting, you have two methods. One is the integrated method. Now, what is integrated? Where my financial books and my cost accounting books are combined into one set of books. So I prepare only one set of books which will serve the financial accounting, which will serve the cost accounting both. It is called as the integrated method. Let me tell you, students, practically this never happens, because once you merge your financial books with your cost accounting books, your cost accounting data gets exposed to the world, because your financial books, financial reports are shared with everyone. It is shared with banks, it is shared with government, it is shared with your shareholders, it is shared with income tax, GST departments. So your cost accounting data will get exposed, which will be very, very critical, which will be very, very risky, because for any business, costing is a very sensitive information. So they do not want their cost data to go outside. That is why practically integrated systems are not followed generally. However, for academic purposes, we should know, that is why we are studying that. Now, if you have integrated your books, you will open the respective assets and liabilities account. So what you will have? You will have the cash and bank account. You will have the debtors account. You will have the creditors account. You will have your fixed asset. You will have the capital and reserve accounts. So all these accounts will be drawn if you are following the integrated method. Now see how double entry would be completed. Whenever you purchase material, material account is debited and this account will get credited. Similarly, when you pay wages or salary, labor cost account will get debited and this account will get credited. Similarly, when you pay your overheads, again, this account will get credited. And if any of the overheads are on credit basis, then this account will get credited. So this is how these accounts will be used, or these accounts are used for completing the second effect of these transactions. Now, all these accounts which you prepare, which you have studied in your 11th standard accounts, are part of your normal financial accounting. And these accounts will be prepared whenever you are following the integrated system. But as I said, practically, integrated system will not be used. So what we follow in real life is the non-integrated method. Now in non-integrated method, what is non-integrated? Financial books and cost accounting books, they are independent. So here, what we are studying is only your cost accounting books, because financial books are maintained separately and they are maintained in the manner what you have studied from standard 11. So in standard 11, whatever you studied was pure financial books because they are maintained separately. On the basis of that, whatever P&L, balance sheet, cash flow, fund flow is drawn, that is shared with outsiders. But your cost accounting books are kept separate, and I should say they are kept secreted. Secreted means they are not shared with everyone. Only very few people from the management have access to that. Not all board of directors have access, and shareholders they do not have access except when they specifically make a request, because cost information is very sensitive. Now in this particular case, we need to complete the second effect of these purchase transactions or expenses incurred transactions. So in short, for that, what you require all these assets and liabilities account. Now, since my books of financial and cost are separate, please understand my cost accounting books do not require debtors, creditors, balances. Why? Because we do not want to know how much money we owe to someone or how much money someone owes to us. We do not want to know what is my balance of building account, what is my balance of machinery account. These things I don't require. These things are required by the financial people and they have all this data. They have all this data with them in their financial books, on the basis of which they have already prepared the assets, liability, that is the balance sheet. I do not need to prepare a balance sheet. See, right from day one of this costing subject, whenever you have started, you have never referred to cost sheet. You have never referred to your capital accounts and all. Why? Because these are not required by us in costing. However, I still need all these accounts here to complete the second effect. Now, how do I manage this? I need these accounts to complete the second effect, but I do not need these accounts in detail because I don't need to prepare balance sheet. So what I do is, for all these accounts, I prepare one single account. So this single account represents creditor, debtor, capital, reserves, fixed asset, all types of provisions, everything is this one single account. So I merge all these accounts which fall in your balance sheet into one account. Now this is what is logically the meaning of this one account. And what is the name of this account? It is called as the cost ledger control account. CLC, or it is also called as the General Ledger Adjustment Account, GLA. So this is what is this account. Now this account is what? It is your debtor also, it is your creditor also, it is your cash also, it is your bank also, it is your fixed asset also, it is your capital account also. All these balance sheet related accounts are what is this one single account representing. I hope you have understood this. Now again, what will happen? Whenever I'll incur these expenses, whenever I'll do purchase of material or I'll pay wages or I will incur overheads, again, this is debited for material, this is debited for wages, this is debited for overheads. And what will get credited? This account. So material purchase is credited here, wages, salary paid is credited here. All overheads, production, administration, selling, distribution, paid or incurred is credited here. Because this account is creditor also, this account is cash also, this account is bank also. Just keep this in mind. So the first step, now I'm talking about the entries. The first step is paying or incurring the expenses. For that, respective accounts are debited, and in non-integrated system, one account is always created, that is the cost ledger control. Now comes the second part. See, first part, that is incurring these expenses, will not be much challenging for you because you have done similar in your financial accounting in standard 11. The only difference was the names. Now I think the names should be comfortable. So over there, whenever you purchase material, you debited purchases, you credited cash, bank or creditor. Here we are debiting material account, which is the SLC account, that is the stores ledger control account, and we are crediting the common account, which is the cost ledger control account. Whenever in accounts you are paying wages or salary, you are debiting wages, you are debiting salaries, and you are crediting cash bank. Here we will debit the labor cost control account because that represents wages, salary, everything, and we will credit the common account, which is the cost ledger control. So the difference is now only in names. So first series of entries, which is for expenses paid or expenses incurred, is simple. Now, the special point, which is not there in your financial books, is charging of these expenses. See, what is costing? Costing is once you have incurred or paid the expense, now you have to charge it to your product so that you get the cost of each product. Now, whatever charging you do, which you do in cost sheet, you simply prepare a statement and you write all the expenses and you add. How is that represented in your financial books? That is what, sorry, in your cost accounting books, that is what is this cost accounting topic. Now, for this, once you have passed the debit entries of expenses, you have to be very clear with the charging. Now just pay attention. Now in charging, what your yes, what your cost accounting says that our expenses are classified into two categories, direct and indirect material. Now you may have some indirect material here. You may have some indirect wages here. Now, indirect material, indirect wages cannot be charged to product directly. But then in costing, you have studied that these are part of overheads. So what you have to do is whatever is the indirect material, indirect labor, that is indirect wages, you will transfer it from the respective account. Like indirect material will be transferred from your materials account. And what is now materials account? It is the stores ledger control. It will be transferred to production overheads account. So indirect material will come here. Now see, when I'm showing arrows or when I'm writing only the names, I'm sure you are understanding the journal entry. So journal entry will be production overheads control account debit and stores ledger control account credit, because here I have to credit, here I have to debit. Similarly, whatever is the indirect wages, see, when you have paid, all wages are debited here. When you have purchased, all material is debited here. So while purchasing, while paying expenses, you will not distinguish between direct and indirect because all are paid. But when you have to charge, you will classify it and then charge. So indirect wages will also be transferred here. Now, generally, 90% of the sums, indirect material will always go to production overheads account only. However, in 10% sums where they specifically mention that there is some material which is used for administration, there is some material which is used for selling and distribution, then this indirect material will get transferred here or here, but that will be given in the sum. Otherwise, whenever they talk about indirect material, now what will be indirect material? Either they will say indirect material or they will say material used for repairs, material used for maintenance. That is not for production. Whatever is not used for production is indirect. So all that you will transfer to production overheads account. Correct, students? Now comes the next part. What is the next part? Now, after I have done treatment of indirect items, now the next item is direct material. Now, whatever direct material I have used in production, that has to be charged to product. Now, my product is appearing in three stages. While it is under production, it is appearing here. When production is complete and it is lying with me, it is appearing here. And when it is sold, it is appearing here. So every product is appearing in three stages. Now you have to understand by this what I have given, key which expense is incurred when or which expense will be charged where. Now, when material, direct material is consumed for production, where is production happening? It is happening in factory. So you will charge it here. Similarly, whatever is your direct wages, that will also be charged here, right? Again, in overheads, whatever is your production overheads, which you have to now charge, that will be charged here. Correct, students? I hope this is clear. Now, you have opening WIP stock. In fact, here you also have opening material stock. So opening SLC stock. Similarly, you have opening WIP and you have closing WIP. Now, interestingly, once you have debited all the expenses which are incurred in factory, what you get is the factory cost. In the language of cost sheet, what you get is factory cost. Now just visualize cost sheet. This is prime, material consumed. This is wages. Total of this is prime cost. To that you are adding factory overheads. To that you are adding opening WIP, subtracting closing WIP. So what you are getting is factory cost. Factory cost of what? Of your finished goods produced. So whatever goods are produced during this particular period, that is what is the balancing figure. Now, where do finished goods or finished goods produced go? So finished goods produced will come here. So in the question, if they are giving finished goods produced or simply finished goods during the month or period, you should know that now production is complete. So it should be transferred from your factory account to your go down account. Factory account means from WIP to go down. Now, after creating this, whatever is the balance will be your closing WIP and this account will get closed. Correct? Is this clear, students? Now, again, here you'll have opening finished goods stock. You will have closing finished goods stock. Now, interestingly, administration overheads. These are to be charged here. So, production overheads you charged here. Administration overheads you charge here. Now, students, interestingly, this is your factory cost, which have come from here. In that, you have added administration overheads. So what it becomes? It becomes cost of production in the language of cost sheet. To that, you add opening finished goods, you subtract closing finished goods. What this becomes? This becomes cost of goods sold. So whatever goods are sold, and visualize also from go down, whatever goods are sold are going out. Where they are going? They are going to the customer. So your cost of goods sold, whenever it will be given in the question, cost of goods sold, you should know that it has to be transferred from finished goods to your cost of sales account. This is clear, students? Again, this account will be closed. So once you credit cost of goods sold, you will get the balancing figure of closing finished goods. And in this cost of goods sold, you will add the selling distribution overheads, which has to be charged. You charge it here. So cost of goods sold per plus selling distribution overheads, what it becomes, students, it becomes your cost of sales. And this amount is transferred to cost P&L. See the flow of these entries. Correct? Now, what else will come? You will have sales. Now, whenever there are sales, you will directly credit it in the P&L account and it will get debited over here. Why? Because this also is your debtors account. So what is the entry for sales? Either debtors debit or cash bank debit. So this account is cash bank also, this account is debtors also. So this account is debited for the sales amount and sales at the end we transfer to trading P&L account. So our cost P&L account is credited. So debit is your total cost, which is cost of sales. Credit is your sales value. Now here, this account should be closed, but before that, you will close all the other accounts. So you will have closing SLC. This debit pay credit charge is closed. Now here in overheads account, what you have paid is actual, what you have charged is using the ORR which you studied in overheads chapter, which is estimated rate. So there is a possibility that there will be some difference here, difference of under absorption or over absorption. Difference of under absorption or over absorption. So all your overheads account generally will have a difference. If the difference is coming on the credit side, it is under absorption. If the difference is coming on the debit side, it is over absorption. Whatever it is, this difference has to be transferred to cost P&L account. So under absorption, if it is, will come on the debit side because it is your loss. Over absorption, if it is, it will come on your credit side. So and after debiting, crediting this, and in case if there is any abnormal loss given in material WIP anywhere, that also will be adjusted over here. And finally, you will get your net profit as we get in P&L. Now, interestingly, what you do of net profit in your accounts, you transfer it to capital. So this net profit amount, which you will get as the balancing figure, you will transfer it here. Why? Because this account is again your capital and reserves account. So net profit that you are getting in P&L is transferred here. Now see, I'm showing entries from the perspective of non-integrated. Integrated, you will understand more easily because integrated, the names are very similar to what you do in accounts. So you know where the second effect has to be given because here there are separate accounts. Here there is one common account. So students, this is how the entire flow of cost accounting happens. If you want, you can just take a screenshot of this. So if there are any questions, please let me know. Then we will take up your. Yes. Astha, so beta abnormal loss entry, what it will be. So losses are debited to P&L. So your cost P&L account will be debited. So first entry is it will come to the debit of cost P&L. And credit entry will be what? So it depends upon what loss it is. If it is loss of material, SLC will be credited. If it is some unproductive wages, which is a loss, labor account will be credited. If there is loss in WIP or finished goods because there is some loss from there, WIP or finished goods accounts are credited. So abnormal loss, debit will be to cost P&L and credit will be to the respective account from where the loss has come. Clear, Asta beta? Understood? Everybody has understood this. So student, this is your cost accounting. both integrated and non-integrated methods. Now, once you have done with this, we will now go to the sums. So I've selected some sums. Now see, when you are solving these sums, you may have to prepare one or two accounts extra depending upon the requirement of the sum. Otherwise, whatever accounts I have shown, these are the accounts which are required in every case. Correct? Another important question. Thank you, Asta, for asking this. Asta is asking, sir, whether overheads account will have balance carried down. See, again, 75% cases of your questions, overheads difference will be your under over absorption, which will be transferred to cost P&L always. However, in 25% cases where the overheads balance is carried forward, why? Because it represents the prepaid or outstanding overheads. And prepaid outstanding is always carried forward because it will be adjusted in the next financial year when the payment will be done or it will be adjusted. So if the question has prepaid or outstanding overheads, then only you will carry forward it. Then only your overheads account will have balance carried down, brought down. Otherwise, generally overheads account will not have balances. Fine, beta? Is this clear to everyone, students? Should we proceed? Okay. You may take a screenshot of this so that when I'm answering, you may not, I'll be just swapping the screen. So it should not be a problem for you. Just take a screenshot of this question. Yes, but ask that. In the question, it is mentioned prepaid or outstanding. Asta, you had asked a question earlier. It is relating to semi-variable. That if it is written that semi-variable is 20,000 per annum up to 50% and an extra amount of 10,000 for every 25% increase in capacity. Means here part thereof word is not written. Then what is the treatment? See, understand this. Part thereof is not written means what is the treatment? So let us say your capacity right now is 25%, 30%, 40%, 50%. If any of these capacities are given, you'll write total 20,000. Similarly, if the capacity is given 55%, 60%, 70%, 75%, if any of these capacities are given, you will write 20 plus 10, that is 30,000. So even for 5% increase above that 50%, you will write full 10,000 extra, that is 30,000. Similarly, if your capacity is 80%, 85%, 90, 95, 100, you will write 40,000, which is 20,000 plus 10% plus 10%. So when part thereof is not written, it means even for 5% increase in capacity, you will have to take full extra amount of 10,000. Clear, beta? Asta, understood? But generally in our sums part thereof is not written. Why? Because in that particular case, they will not give you the question in this manner that for 25% 10,000. Because if it is part thereof, wala example, or if that is the real life situation, then how they give you? They give you that for this capacity, this is the expense, for this capacity, this is the expense, then we have to use the mathematical formula of breaking that semi-variable into variable and fixed, so that with every increase, we can increase the variable portion. So in this type of semi-variable, what you have given the example, they will never give part thereof because it is the step semi-variable cost where for every capacity, that amount is fixed. Correct? Chalo students, let us solve this. Now here, why I have selected this? Because this question has one extra account and plus three new adjustments than what we have discussed. So the extra amount in this sum is this. What is this building construction account? Now see, many times you have studied this in accounts also, that whatever assets are required by you, you are yourself constructing those assets. You are yourself creating those assets. Now, when you are creating those assets, now in our accounts, we call this as capital WIP. If you remember this, in our accounts, you have opened or you have done this particular account called as capital WIP. Correct? So what is this account? When you are constructing your own asset, then that account is the capital WIP or that asset WIP account. Now, in this question, as I said, there are three different types of transactions which we have to understand. That is why I have selected this sum. But firstly, let us understand. So you have the opening balances of these five accounts given. Then you have transactions which have happened during the year. So first we will post the opening balances and then we will go to the transaction. Now from the opening balances, you should understand which method is followed. So if they are giving you opening balance of cost ledger control, or if this would have been called as general ledger adjustment account, whatever. So there are two names, either cost ledger control or general ledger adjustment. So in that case, you will understand that this account is nothing but the non-integrated system. Correct? So let us solve. I'm just writing short forms so that I can do the solving faster. In exam, you are expected to first write the full name and then maybe you can use the short form in the bracket like how I gave example above. And then you can use the short form in your entries also, but you have to first write the full name. So see, first you draw all the expenses accounts. Then after this, you will draw the product accounts. Now here you have one new account, that is the building construction. So I prepare it here. And last, I will prepare that common account which represents all assets and liabilities. That is cost ledger control account, which is CLC. Okay. Now we start with balances. So what are the balances given? So amounts are rupees in lakhs. So we will continue that. So you have balances here, 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 here. Acha. Also an interesting thing, students, you should remember. It may happen that in a question, they may not give you this balance purposely. Now we simple follow accounting double entry concept that our opening balances and obviously the closing balances should tally, then only the books are open or closed. Now, if they have not given this balance in the question, you have to simply do what? Take all the other opening balances, whatever are given. Now, if all are debit, add them. If any one of them is credited, subtract them. The net balance of all these debit and credit will be this. So I hope this is clear, students. So how you will find out this if it is not given in the question? You will take the other balances, you will add all the debit, and if there is any credit, you will subtract that. So you will get this opening balance. Now here opening balance is given, but we will cross check whether it is tallying with what I just explained. so that you'll understand that in the exam you have to do it yourself that way. So 80, 20, 430. So 80, 20, 430, 10. Okay. These are all the other balances given besides the last CLC. Now just make a total 80 plus 20, 100, 100 plus 10, 110, 110 plus 430 is 540. So without even seeing what is the balance given in the question, I will directly write the total of this. Now see, it has to tally. So keep this in mind. If this balance is not given in the sum, for example, for any reason, the other balance is total if all are debit, and if any one of them is created, then you have to subtract that. This will be your CLC opening balance. Correct? No doubts? Chalo. Now I give you 2 minutes before I solve, because I want you to understand also. So if I only solve, then you will not develop your understanding. Now you have all the transactions in front of you. Maybe you do the posting at your end first, right? So just draw the accounts like this. So do it fast, beta, because you cannot only simply see the screen and understand, you have to solve it. So see, I have done the starting. So you also prepare these accounts. And then after posting the opening balance, I give you 5 minutes. Please do the postings as per what you understand of all the entries. Correct? So start. So you have to solve it first. So students, pass the entries. If there is a doubt raised, I will answer the doubt. Chalo, make it a bit fast. You can use short forms for the time being while passing the entries. See, whatever transaction you feel is not comfortable, you may leave it for the time being. But others, at least pass them. Chalo. Should I start? Now, the transactions during the month, how they are given? First, they have given the transactions relating to materials. So purchased 40, issued for production 50. Now, whatever is purchased, 40 will be debited here, credited here. So what will be the ledger account? You'll write to CLC. Here you'll write by SLC. This is for purchase, correct? Then what is issued for production? You'll write by WIP. And here you'll write to SLC, correct? Students, let me know whenever you have any questions or doubts. Now, this is issued for general maintenance and this is issued for building construction. So whatever goes for maintenance, we will transfer it to production overheads control. And whatever goes for building construction, we transfer it to building construction account. So it is 6 and 4 of K. So 4 and 6. 2 SLC, 2 SLC. Correct? Now, when it comes to wages, what they have given gross wages. Now see, gross means what? Direct plus indirect. Now, first thing is, whenever wages are paid, whether it is direct or indirect, you have to always debit the gross amount to the labor account. So here I'll debit to 150. Now, what is the ledger account I'll use? I'll use the ledger account of cash bank, which is the CLC. So second effect will be here. So as I had explained above, all expenses, material purchase, wages, salary, all are credited here and debited in their respective accounts. See, that is what I'm doing right now. And later when overheads will come, again, I'll debit the respective overheads account and I will credit all the overheads paid or incurred here in the CLC account. So same thing I'm doing right now. Now, so first wages gross, direct, indirect, both are posted. Now comes the interesting part. Now, while charging, they have given me indirect wages and building construction. What is missing is this. This is our first special entry. As I said, there are three special entries in this question. This is the first special entry. What is the first special point? How much is the direct wages component in this gross wages is missing? Now, if it is missing, can we identify it? Let's see. So, by indirect, where indirect will go, I hope now you all know it will go to POC, and then you have something for building construction. So 40 is indirect, 10 is building construction. So 40, 10. This 40 gets posted here. This 10 gets posted here. Now the question is, out of 150, the main component, which is the direct wages, is missing. So that we will get as the balancing figure. And where does direct wages goes? Direct wages will go to, so this is a balancing figure. How much it is? 150 minus 40 and 10, so it is 100. This 100 will go to WIP because WIP represents your factory, and direct material, direct wages, all are used in the factory to do your production. So it comes here. So this is the first special or different entry in this question. Now with this account is closed. Generally labor will get closed, and generally labor will not have any balances. Now coming back to overheads. Now in overheads, what they have said, actual amount incurred excluding above are already discounts. So this is wages, not wages, sorry, production overheads incurred. So it will be incurred is through the CLC account. How much it was? It is 160. Okay. So CLC 160, right? Now, how much is charged to building construction? 20. So from here, you charge to building construction 20. Now you should have got the amount which is to be charged to the WIP, but that is again missing. So this is the second special point of this question, that the amount to be charged to WIP, that is the production overhead charge, is not given in the question. नहीं आता बेटा, even if they would have not written excluding the above items, like even if this is not written, see, whatever is the indirect material and labor component, that will always come here, and in overheads you will always have the amount excluding that. So this is written out of extra caution. Even if it is not written, the treatment remains same, right, Asta? Now again, what is missing in this transaction is the production overheads charged, that students will get as a balancing figure. Now, what interestingly they have given this, generally we find as the balancing figure, but they have given this over here. That is the under absorbed overheads. Now, what do we do of under absorbed overheads? If you remember, I had already mentioned that under absorbed overheads will go to cost P&L. So here I have to write to POC under absorbed overheads. How much is the amount? The amount is 8. And from where this amount will come? This amount will come from your POC itself. Right? Now I have some balancing, but generally all these accounts, overheads and all should be tallied at the end because there may be other entries relating to this. So I keep this account pending. Now comes the third entry, which is special. What is special is royalty paid. Now, generally, royalty paid is not given in 75 to 80% of the sums. Firstly, what is royalty paid? It is a direct expense. Now, you'll find that in the ledger accounts that we have prepared, we have not prepared a direct expense account. Why? Because direct expense is not given in 75 to 80% of the sums. However, here, direct expense is given. Now, whenever direct expense is given, what will we do? the entry that we have to pass is, since we do not have a direct expense account, we have to pass this entry directly. Now, what do you mean by directly? See, had I had a direct expense account, what I would have done? I would have debited the direct expense incurred to direct expense account and credited to the CLC account, which is the cash and bank account. Then what do I do of direct expense? Again, it is charged to factory because it is part of prime cost. So this would have been my entry had I had a direct expense account. But since I'm not having a direct expense account, I will combine both these entries. So the debit direct expense, credit direct expense will be knocked off, and the entry which I'm having is this. So this is my direct entry. What? WIP account debit to CLC account. So this is the third special point in this question, students. Correct? What is the amount? The amount is 5. So here I will write 2 CLC. Just for your reference, it is the royalty amount, 5. And here it is by WIP, 5. Understood, students? Clear? Now, they have merged selling, distribution, and administration overhead. So it is 25. So here I will also merge these accounts. So it is selling, distribution, and administration overheads control account. 2 CLC 25 by selling, distribution, administration 25. Now comes sales. I've already mentioned what we do of sales. So sales has to be credited here, and what has to be debited is debtor. Debtor is represented by CLC. So sales account or sales amount is credited here and it will be debited here. Cost P&L 450. Correct? So all the transactions given here are posted. Now we have some additional information. At the end of the month, you have stock. So this is the closing stock, raw material WIP. Now this is again interesting in this sum. Students, generally closing balances we find out. So we have to find out the closing balances by doing the balancing of the accounts, but here they have given them. It means something else will be your balancing figure. So raw material is 55 and WIP is 25. So let us pass these entries. So raw material is 55, WIP 25. So by balance. Now since this is closing balance, it will be only a single entry because it is not having a second effect. It is only balance carried down. Correct? Now, interestingly, if you observe, your material account had opening, it had purchase, and it had material consumed for different purposes, and it has closing. So technically, all transactions in this account are complete. So this account should tally technically. However, you will find that this account is not tally. Why? They have given the reason. There is some loss in this account. This loss, they have specifically asked you to treat it as factory overheads. Now, had they not asked me to treat it as factory overheads, what I would have done, I would have transferred it to cost P&L, treating it as abnormal. But since they have specifically asked me to treat it as factory overheads, I will transfer the loss to factory overheads. So how much is the loss? This is 120. The total here is 120. Now here is 56, 60, and 55. So loss is 5. Where this loss will go, this will go to PO as per their specific instruction. So this is the amount pertaining to loss. Correct? But this loss, since they have specifically asked it to treat it as factory overheads, we will transfer it here. So to SLC 5. Now this account is closed with 120 as the total. Correct? Okay. Now something again interesting in this question. They have said that the building under construction was finally completed during this period. Now, if the building is completed, it now becomes your asset. And which account shows all the asset? This account shows all the assets. So what effectively we have to do? We have to transfer this balance to CLC because now this building under construction is complete. So it becomes my asset. So 20 plus 30 plus 4 plus 10 is 44. So this total of 44 becomes my asset and it will be transferred to building under construction. So it will be transferred here. Correct? So now this account is also closed. Now something very special in this sum. They have given the gross profit margin. Now students, we have to understand that what do you get if you subtract the GP from sales? So you get the cost of the goods, correct? Now, since this is sales, when you subtract the GP, what you will get after subtracting the GP, you will get the cost of goods sold. So what is special in this sum is we have a small working. Sales minus GP. What you get is cost of goods sold. Sales is 450, as you know. GP is given as 20% of sales, so it is 90. So cost of goods sold is this. Now I had explained you students what is the treatment of cost of goods sold. So whatever is goods sold, it will go out of your FG account and it will be transferred to COS account. So the treatment is it will be credited to your FG because now that many goods are going out of your godown and they are going to the customer. So it will be debited to the COS account, right? Okay, Asta has asked me a question. Firstly, sir, in book it is written in the question royalties related to production. So if given not related to production, but still royalties are direct expense and direct expense will always be debited to WIP. Next question Asta is asking, sir, what if the building construction would not have been completed? Then you would have carried forward the balance in building account to the next month. Like how here we had opening balance of building construction. Why? Because the building was not completed at the start of the month. So you had opening balance. If let us say it is not given in the question that building is completed, you will still treat the building under construction and whatever is the balance. In this example, it is 44. It would be carried forward. Fine. Okay. So prepare relevant accounts, etc. So now all transactions are completed, students. We have done all postings. Now let us start balancing. SLC we have balanced by transferring the 5 to PO. LCC was balanced. Now in my PO, this amount is pending. What is the amount? The amount of production overheads charged. Now we have already given under absorption amount. Everything is given. So now we will balance this account and we will get the balancing figure as my production overheads control. So 160 plus 40 is 200 and 210 is the total. And 210 minus how much? 20. This is 20, no? Building construction. Yes. So this is 20. I'll just write it properly. And this is 8. So 210 minus 28 is not 211. It is 28, no? So why 211?
160 plus 6 plus 40 plus 5 is not 210.
Sorry?
160 plus 6 plus 40 plus 5.
It's 211.
Yeah, you wrote 210.
Okay, okay. Fine.
Thank you.
So it is 211. 211 minus 28. How much it is? 2183. correct? 183 is the balance that I'm getting, which will be transferred here to WIP. This amount will go to cost P&L because nothing is given for charging. So entire is to be debited to cost P&L. So to selling, distribution, administration, 25, correct? Now, coming to WIPC, you have opening, you have material, you have labor, you have overheads, you have direct expenses, and you have closing. So what is left is the amount which is transferred to finished goods account. So this is your balancing figure again. So students make a total 20 plus 50, 70, 170, 175, 175 plus 183, 358, correct? And 358 minus 25 is 325 plus 8, 333. So this account is also closed. The amount which is to be transferred to finished goods is 333 coming from the WIP. Now closing this account, it is 763 minus 360. So 360 subtracted from 763. The amount left is 403. Correct? So 403. No, 1 second. That is your closing balance. COS we already have. COS already is 360. Right? We got this figure earlier. Now, whatever is the balance is your balance carried down. So how much is your balance carried down? It is 403. So this is the closing balance. Now this COS will be transferred to cost P&L. So this is also closed. So to COS 360. Now balancing this account. So we have 450 here, and here we have 360 plus 25 plus 8 is 393. Correct? 393 minus this is 57. So this represents a net profit, and where this will go, it will go to capital and reserves account, which is the CLC account. So net profit 57 is posted here by cost P&L 57. Correct? So this account is closed. Building under construction is closed. Now, students, you will get the balance carried down here. So you'll balance the CLC account, and the balance carried down will appear here as the final answer. Understood, students? So this is how we have this particular sum going. Correct? So complete this sum. We take our 10 minutes break, and after break, we come back to solve the further sums. Kindly complete this sum in the meantime, and after the break, we take up the next sums, whatever are possible today. Fine. So 10 minutes break, students. Yeah, yeah. Students, what is the balance? Those who have computed, tell me the balance. Okay. Let me go to this next sum. Now, the purpose of selecting this next sum is it is a different type of sum. It is a sum relating to incomplete books, like how you have single entry sums in your accounts or sums relating to incomplete entries. Similar sum is this. Okay. Students, I have only got one answer of closing balance of the previous summer. I request others also to kindly post. Fine. Now, see students, what is given? So in the books, following incomplete entries are found as on or for the month 31st of October. So you are given opening balances in the material account, in the WIP account, in the finished goods account, in the factory overheads account. Now there is no balance in factory overhead supplied COGS, that is okay. And interestingly, they have given you creditors. Now see students, the moment you understand that creditors are given, it means you should know that this is a question of integrated system. Because in non-integrated, you will never have debtor, creditor, cash or bank. These accounts will not there. So if they have given you the creditor account, it means the method they are following is integrated. Well, it makes no difference to us because only the last part of cost accounting changes between integrated and non-integrated. Accounting remains the same. Fine. Now this is the different sum. Why? Because if you see this sum, when we'll complete reading the additional information, you'll realize that in this question, they have given you some balances and they have given you some transactions, not all. So firstly, here you cannot prepare the complete set of accounts what we were doing earlier because complete details are not given. And that is why if you see in the requirement of the question also, they have only asked specific accounts or rather not even account specific amounts. So they want figure only of material purchase, then cost of goods completed, then overheads charged, then the closing balance of WIP, then material consumed, closing balance of stores ledger control, and the under or absorbed figure. Why they have not asked you to prepare complete accounts? Because in this some students, the data itself is incomplete. We cannot prepare all the accounts from this question, and that is why they have not asked for all the accounts. So let us solve this. So students, here I have got only one balancing figure by Astha, which is 483. Fine. Now let me take you to the second question. This is of integrated system. And here the special point in this sum is it is of incomplete records. So this is what is special. That is why I have selected this sum. Now we will prepare only those accounts which are given in the question because other accounts are not possible. So what are the accounts given? So first account is the stores control, that is the material account. Second is WIP. So we will also prepare the same SLC account, which is the stores ledger control. Second is the WIP account. Then what else is given? They have given the finished goods account. Then they have given the overheads account, COGS and creditors. COGS and the creditors. Fine. Let us do the postings. So opening balance in material is 54,000, WIP is 6,000, and this is 75. Sorry, 6,000 is here. This is 75,000. Correct? So this is to balance brought down. To balance brought down. To balance brought down. Correct? Let me just write it compactly so that fine. The opening balances of these three accounts are done. Then in overheads, they have given total debits. So it is like they have given you the posting of total overheads incurred, which is 45,000. Now see, for total debits, what will be your entry to cash and bank? Since it is integrated system, whatever overheads are paid, whatever are the debits, it will be through cash and bank account. And then they have given you the balance brought down of creditors. How much it is? It is 30,000. Okay, done. Now let us go to the transactions given. What they say. The first thing they are saying is factory overheads are charged using a rate per labor hour. So as per our overheads chapter, you understand this. ORR is to be calculated by dividing the overheads by the labor hours. Now they have given you the budgeted overheads. It is 675 and the labor hours is 45,000. So what first data we will find out is, so let me call all this as your working notes. So first is ORR, overhead recovery rate, overheads upon budgeted labor hours. Correct? Now, how much is it given? 6,75,000 and 4,50,000. And 4,50,000 hours. Half of 4,50,000 is 225, and if I add 225, I get 675. So it means it is rupees 1.5 per labor hour. So what is my overhead recovery rate or charging rate for factory overheads? It is rupees 1.5 per labor hour. Then the balance in the creditors for purchase on the last day, that is closing balance is 15,000 and payments made are 1,05,000. So payments made are 1,05,000. 1 second. Cash and bank. And then to balance carried down 15. Now see students, recall your single entry system of accounts. You are given opening balance, you are given closing balance, and you are given payment. So what is the balancing figure that I will get is the balancing figure of purchases. Credit purchases, correct? So this credit purchases, how much it is coming? So 1,05,000 plus 115 is 120. So 1,05,000 plus 15 is 120. And 120 minus 30 is 90. Now where this will go? This will go to SLC account because purchases are posted in SLC. So 90,000 representing credit purchases will go to SLC. So I will write two creditors, 90,000, and this is representing what? Credit purchases. In fact, this is our first requirement. They are asking you how much is material purchased. So we have found out this. It is 90,000. Correct? So one figure is done. Now, What else is given? They are saying the finished goods inventory on 31st October, that is closing balance in finished goods is 66,000 and cost of goods sold is 195. Now again, we'll get something from here. So finished goods closing amount is given 66 and COGS is given 195. $66 balance carried down and 195 is the COGS. So it comes here to FG. Now, again applying single entry logic. So I have, sorry students, I have made a wrong posting. This should have come here. So 195 and by balance carried down. This is your factory overheads account. Many times in exams, this happens that you may just put it in the wrong account head. Okay, now we are in the finished goods account. You have opening balance. You have goods which are sold, which is transferred to COGS, and you have closing. So what we can find out over here, balancing figure is what I have received from the WIP account, which represents my finished goods produced. Correct? That would be our balancing figure. So let us find out. So this total is 261. 14. So this is 186. This is your balancing figure. Balancing figure of finished goods produced. Correct? So 186 is finished goods produced. So from where it is coming from here. So by FGC 186. So we have found out the other balance also, cost of goods which are produced or completed during the period. Now, proceeding further. Now what is given? On 31st October, there was only one unfinished job. Now what is unfinished? Unfinished is you started working on it, but that particular work, that particular product, that particular production was not completed. So this is nothing like your closing WIP, correct? Now what is given? The cost record shows that rupees 3,000, which is representing 1,200 labor, is towards the labor cost. Rupees 6,000 is towards the material cost. So this is, in other words, you are given details of the cost incurred on this WIP. And with this, we will be able to find out the value of closing WIP. So let us do our second working of closing WIP stock. Now, on this, some material cost is incurred, some labor cost is incurred, and overheads we have to charge. How much is the material cost? It is 6,000. Labor cost is 3,000. So it is 6. It is 3. And they have given 1,200 hours are worked. And we have computed our ORR is 1.5. So 1,200 into 1.5 is 1,800. So closing WIP value is 10 lakhs 8,000. Balance write down 10,800 WIP. So, yes, sir. Okay, sir. Okay, sir. Let me know if still it is breaking. Yes. So students, we have computed the fourth part also. We have found out the balance of work in progress. Now comes the next point given. Total 28,200 labor hours are worked and all workers are paid the same rate of wages. Now, interesting question is, what is the wage rate? Now that we can find out from the data which was given to us. So now we will be calculating wage rate, then total labor cost and factory overheads charged. Now, how do we find out wage rate? So wage rate is nothing but wages upon labor hours. How much is wages? So see, interestingly, in this previous adjustment here, they had given 3,000 for 1,200 labor hours. So from here, you get a clue that at what rate wages are paid. So from this, we can find out our wage rate. So 3,000 was labor cost, 1,200 was hours. So 12 to the 24, so it is rupees 2.5 per hour. So your wage rate is 2.5 per hour. Now we can find out our rupees 2.5 per hour will give you your total labor cost. And similarly, we can find out overheads charged. Overheads are also charged using the same labor hours. So we'll take the labor hours multiplied by the ORR, which we had computed earlier, which is 1.5 per hour. Correct? So let us do the computation. 28 twos are 56 and half of 28 is 14. So 28, one second, I'll do the calculation. So it is 28, 200 multiplied by 2.5. So this is coming to students 70,500, correct? And then multiplying it by 1.5. This is coming to students 42,300. So these are the values that I'm getting. Now, what are the postings? So to LCC, how much is the total labor cost during the month? It is 70,500. There is no second effect of this because we do not have the labor account. Then how much is overheads charge? It is 42,300. So from here by WIP 42,300 to POC 42,300. Correct? So we have found out the overheads charged. So this is also done. Now, all transactions given in the sum are complete. Let us do the balancing, students. So you have opening, you have purchase, but two figures are missing. So I cannot do anything of this account. Then I come to WIP. Opening, purchase is missing, labor, overheads, charged, closing. So this account is complete. So from here, I can get the balancing figure of purchases, not purchases, material cost charged. So here I am 196,800. So 196,800 minus what all things I have. Opening balance 6,000 minus 70,500 of labor and minus 42,300 of overheads. So here, students, I am getting 78,000 as the balancing figure. This represents what? This represents the material charge. So this 78,000 is the balancing figure which I am getting from the WIP account. So let me come here and do the posting. So by WIP, how much is the the material charged? It is 78,000. Now, once I have material charged, I can find out the closing balance of the account. So here the total is correct, and here it is 78. So this amount will come to 66,000. Correct, students? So material consumed is calculated, and also the balance of stores ledger, both are done. Correct? So this balance is done. Material consumed is done. Now what is left? Now only this under or absorption is left. So by cost P&L, under absorption, how much is the difference? It is 2,700. Correct, students? No, but Astha, see, indirect material, if you're treating 66,000 as indirect, so it will be wrong. Two reasons: that will go to overheads, which is a huge amount. Can this huge amount be overheads? Because if direct is 78, indirect cannot be 66. It is equally same amount, which is practically incorrect. Point number one. Two, it will also mean that there is no closing balance in material, whereas closing balance of material is specifically asked. So these two things give us the hint that it cannot be indirect material. It has to be closing balance. Fine, students. So this is how we can find out the balances over here. I hope this is clear to all. This is understood by all. Yes, students, any questions, doubts with anyone? Let me know. No doubts? Should I proceed? Okay. Now, see, next sum I have taken again of posting entries, but then I'll request you can do it yourself. Let me take one more type. Now, this is the last part in cost accounting, which is reconciliation. Now, in reconciliation, students, we have to in reconciliation, we have to do the balancing of two things. One is profit as per cost accounts with profit as per financial books. It is same like the reconciliation we were doing in accounts. That is what we used to call as BRS, bank reconciliation statement. Here it is profit reconciliation statement. Now, students, this part is again very important. It is also interesting. You have to be slightly careful with what you are going to do over here. Now, see, in all types of reconciliation, what is required is we should be able to decide what will be added, what will be subtracted. Now, to decide this add or less, you have to follow an approach. I follow this approach. These two hands represents my profits. This is profit as per my cost sheet or cost accounts. This is my profit as per my financial account, that is financial P&L. So first understand cost sheet, or this hand represents costing profit. This hand represents financial profit. Now you should be able to understand whatever adjustments are given. What is the impact of those adjustments on both the profits. Keep this in mind. So see, what is the first adjustment given? That your works overheads are under absorbed. So works overheads are factory overheads, and under recovered can also be read as under absorbed. So students firstly understand what it means. So under absorption happens whenever your expense is more in financial and less in costing, because absorption happens in costing. So if it is said under absorbed, it means they are talking about costing. So it is less charged, less absorbed in costing. Keep this in mind. So under absorbed, whenever the word absorbed is used, it is in costing. I hope this is clear. Now, once you understand this, that this is under absorbed in costing, means it is the expense which is less in costing. Now, please understand the effect on this. Now, these are profits. Now, if I'm saying the expense is less here, here means in costing books, the expense is less and the expense is more in financial books. What will be the impact? If the expenses is more in the financial books, the financial profit will be less because the expenses are more. So please understand firstly the meaning of the adjustment given. I repeat. So what is the adjustment given? They are talking about work overheads, works overheads is expense, and they are saying it is under recovered. Under recovered, under absorbed means that expense is less in costing, because only in costing you do absorption or recovery. So the expense is less in costing. Now, if the expense is less in costing, understand this, then financial. What is the impact? It means if the expense is less in costing, it is more in financial. And if it is more in financial, what is the impact on this? This is profit. The profit will be less. So because of this first adjustment, my costing profit is higher as compared to financial profit. So we first get the level. Now from where we are doing the reconciliation? We are doing the reconciliation. Starting point is profit as per my costing books. Now, if profit is as per my costing books, so this is my starting point. I have to reach here. So what I have to do? I have to come down. So I will subtract. Understand this. Then comes next expense, administrative overhead, selling overheads, both, no, sorry, not both. This is again under absorbed, this is over absorbed. Again, same. Expenses are under absorbed. Where they are absorbed in costing. So it is less in costing, more in financial. What expense? If expense is more, financial profit is less. Our starting point in this sum is cost accounts. So we have to again come down. So same answer. Conversely, if now expenses are over absorbed means it is more in costing, less in financial. If it is more in costing, what is the impact on the costing profit? Now the costing profit will be less because the expenses are more in costing books. So costing profit is less. Our starting point is this. I have to climb upwards. Add. Now bad debts written off. Please understand the students. We have no such entry like writing off bad debts or any such written off in costing. Costing does not consider these expenses. Again, so this expense is not in costing, it is only in financial books, it is a loss. And if there is a loss only in financial books, so financial profit is less. So firstly, you understand the levels. Now, your starting point is costing in this sum. So you are standing here, you have to climb down. Then comes the next adjustment. It is of overvaluation of stock. Now, which stock is overvalued? Opening stock is overvalued. Where it is overvalued? In costing books. Now, please understand the effect. Now, opening stock is a debit item. Debit item is higher in costing books. Now, you will understand this. If debit is higher in any set of books, like here it is higher in costing books, what is the impact of higher debits? The impact of higher debits is profit is less. Correct? I repeat. Our first adjustment is about overvaluation of opening stock. Opening stock is a debit item, and this item is over. Over means extra amount is there where in costing books. Now, if debit is more, automatically the impact is what? The profit is less, because the debit more will give you less profit. So the impact of this adjustment is my costing profit is less, financial is more. My starting point is costing profit. I have to climb upwards. Second is, again, overvaluation is given. Now it is of closing stock and it is in costing books. Now, closing stock is a credit item. If credit item is more, what will be the impact on profit? The profit will be more. So if closing stock is more, closing stock is a credit item, automatically the balancing profit is more where in costing books because this overvaluation is in costing. So this is the level of my profit. So my costing profit is higher because of this particular adjustment. I have to climb down. Now coming to these two items, both are some incomes which are earned or received. So interest earned, rent received, these are your incomes. Now importantly, these incomes are financial incomes. They never come in your costing books. Costing books never considered financials, financial income and financial expense. So these both are only in financial books and both are income. So what is the impact? Financial profit is higher. We are standing at this stage of costing profit. Financial profit is higher. We have to climb upwards. Then comes preliminary expenses, again written off. Where all these write-off happens, it only happens in financial books. These are all pure financial items. So what is the impact? My financial profit will be lowered because this is an expense only in financial books. So financial profit is lowered. I am standing here. I have to climb down. Now, students, this is how you decide add less. Now, in this particular thing, now in this particular part, you may have two types of presentations. One is the reconciliation statement. This is very simple because this is same like your BRS. So where your starting point over here is one of the profits. So here it is profit as per cost account. Now, whatever you have decided as add, you will write here one by one. And whatever you have decided as less, you will write here one by one. You will reach the other profit, which is profit. In this example, it will be profit as per financial books because you were given the profit as per cost accounts as the starting point. So this format is easy. If they are asking reconciliation like it is asked in this sum, you have to do this format. But generally at inter-level, they ask you to prepare memorandum reconciliation account. Now, when reconciliation account is asked, how to do this? The answer is we have to follow the ledger format, that is the T format. In this, whatever is the opening balance, now since it is profit, just apply simple accounting logic. Profit has which balance? Credit balance. So I will write on the credit side by profit as per cost accounts. Correct? Now, whatever I have decided to add, now when it will get added, when you are putting it on the credit side. So I'll put all the entries, whatever I have decided as add on the credit side and place their amounts here. Now, similarly, whatever I have decided to subtract, we will put it on the debit side. So once you put those adjustments which are having subtract as your answer on the debit side, automatically from this opening balance, which is a credit balance, the debit side items will be subtracted. And now you will get your balance as per the other books. Sorry, I'll not call it as carried down. I'll simply call it as balance. What is this balance? This is profit. So I'll say to profit as per financial books. So depending upon what is asked in the question, you will prepare either the reconciliation statement which is same like the BRS statement, or you'll prepare the memorandum reconciliation account. I hope students, this is clear to all, both the formats, right? Let me take you to one different variety of question. Now in reconciliation, either the question will be directly given, like you are directly given the differences, you have to simply add or less, or the question will be like this. You are given the trading P&L account. Now please remember, when trading P&L account is given, this net profit is profit as per financial books, because trading P&L we are preparing financials. Now they have not given you the differences ready-made. You have to identify the difference using the data given. Now, what is the data given? Firstly, they have also given you profit as per cost accounts. So here both profits are given. So you will get to know at the end of your answer whether your answer is correct or not. Because after reconciliation, if your profit balance is matching with the other profit, it means your reconciliation is correct. Now, what is the other data given? They are saying that the cost accountant's value of closing stock is 42,800. So as per costing books, closing stock is 42,800. How much it is here? It is 4,800. So there is a difference of 2,000. So now in this type of sum, you have to identify the difference yourself. So I will say rupees 2,000. Now this is the difference. What I will say, it is overvaluation. Where? In costing books. So this closing stock is overvalued by rupees 2,000 in costing books. Correct? Then comes the second part. What is the second part? The work expense, that is the factory overheads, in your costing books is 100% of wages. Now, how much will be 100% of wages? Wages is 1,05,000. 1,00,000. Now, this is the costing figure. Now, costing is 1,05,000, financial is 121,300. This difference will lead to under absorption. So I will write over here the adjustment. How much is under absorbed over here? It is 121,300 minus 1,05,000. So it is 16,300. This is the under absorption. Is this understood, students? Then comes selling administration overheads. What is given for selling overheads? It is 10% of sales. So how much is sales given? 750. 10% of it is 75,000. How much is administration overheads given? 1 per unit. How many units are given? 50,000 units are given. So this is now the difference between this is your under over absorption. Now here costing is more, so it is over absorption. So I will write for selling overheads, it is over absorption. How much? The difference is 4,000. For administration overheads, 50 and 53,500, it is under absorption. How much? 3,400. Correct. Then comes depreciation. In costing books is 8,000. In financial books is this. So again, it is under absorbed. How much? Rupees 3,000. Correct. So all these are done. Now, direct expense and purchases, they have no adjustments. Now, since purchases will be actual, we will that is same in costing books. Direct wages also, if nothing is given, it will treat it as same in costing books. Same is with sales. Sales will also be same. Now, both these figures, these are what? These are pure financial incomes. They never come in costing. So these are pure financial incomes for which we will have to do some adjustments. Correct? So now we have identified all the differences. So this is the second type of some students which you'll get. in which you have identified the differences by yourself and then do the answer. But when it is given 10% of sales, see, percentage will never be of units, na Pooja. Percentage is always of amount, na. You cannot take percentage of units, because if you take percentage of units, what you'll get is again units. We want the expense in rupees. So hence, beta, whenever it is saying 10% of sales here, it has to be sales value. Percentage is always multiplied by value, never by units. Correct? Only then you get the amount of overheads. Fine, Pooja? Okay. Now we do the add less. Now here we take the starting point as profit as per financial books. So this will be my starting point. Again, I will prepare the reconciliation statement or the memorandum reconciliation account depending upon what is asked in the sum. If the sum is silent about the format, like here nothing is given as to what format has to be used, then it is your choice. But I will suggest that at inter level, you should use the reconciliation account format. That is a memorandum reconciliation account format. Now here, let us go to each one by one. So first is this. What is the difference? 2000 is overvaluation in costing. Now, because it is a closing stock, first point, it is a closing stock, it is overvalued where in costing. So the impact is because of overvaluation of closing stock, costing profit is higher. We are standing here in this sum at financial profit because we have taken starting point as financial profit. What I have to do? I have to climb upwards. So my treatment will be add. So the first adjustment, my treatment is to add. Why? Because I'm taking this as my starting point. Second, expenses. This expenses is under absorbed. Now we are talking about profits. These are my profits. The adjustment is in expense. The expense is less in costing. Now please understand, students, if the expense is less in costing, what will be the impact on profits? The profit of costing will be higher because the expenses are less. Where are we standing? We are standing at financial profit. So again, I have to add. Then come selling overheads. What is the answer? It is over absorbed. Now, selling overheads is an expense. If expense is over absorbed, what will be the impact on your profits? The profits will be less. Where it is less? In costing, because absorption happens in costing. So if they have given over absorption, it means it is over absorbed, means expenses are more in costing. So costing profit is less. Our starting point is financial. We have to climb down. So my treatment of this is less. Next is over absorption. Again, what is the impact of over absorption? Because of over absorption, expenses are more. Where they are more? They are more in the costing books. So what will be the impact on costing profits? Since the expense are more, costing profit will be less. I will have to, one second. This is under absorption or over absorption? Under absorption, I'm sorry. Since it is under absorption, students, under absorption means expense is less. Since expense is less, my costing profit will be higher. I'm standing at the financial profit stage. I have to climb upwards. Right? Then comes depreciation. What is given for depreciation? Again, there is under absorption. Under absorption means expenses are less in costing. Expenses are less means costing profit is higher. What I have to do? I have to climb upwards. Right? And last item that is left is financial incomes. Now, both these are financial incomes. What is the impact? Because both these are financial incomes, financial profit is higher as compared to costing. My starting point is financial. I have to climb down. So I will subtract. Right, students? This is understood clear by everyone. Okay, Asta is asking in some illustration in the book, the overhead balance is given, but no indications given regarding prepaid or outstanding. See, beta, either they will put in columns debit or credit. So if they are giving debit or credit, you will understand what it is, correct? So if it is debit, it means it is prepaid. If it is credit, it is outstanding. First possibility is when you are seeing the opening balance, see, they give you opening balance in the format of trial balance. And in trial balance, they will give you the the debit or credit. So if it is debit, it is prepaid. If it is credit, it is outstanding. Point number one. If let us say that is also not there, only opening balance is given, which will never happen. They will write in brackets somewhere a debit or credit. But if that is not given, then the second thing is you see the overall balancing. When you'll balance all the amounts, you'll get to know whether this should be debit or credit. Because if you ignore this and balance the remaining amounts, you'll have exactly the difference equal to your overheads account balance. So you'll come to know whether it is debit or credit. But generally Asta and everyone in your sum in the opening balance, they will always give you the opening as debit or credit. See, but Asta, if the last closing balance is not taken as under over absorption, the reason could be that it may not be a sum of the whole year. It may be a sum of part of the year, like 1 month or 1 quarter. Whenever the sum is of part of the year, like 1 month or quarter, in that particular case, beta, you will have to make an assumption. So this is purely an assumption based. See, this will happen in one of the sums, not in all sums. So you can ignore that. Don't get carried away by this one-off adjustments. This is done as per an assumption. The unfortunate part is they may have not written the assumption, so you are getting confused. So if it is the sum relating to part of the year, so many times they assume since it is part of the year, not the whole year, so the difference is not under or absorption, because under or absorption you get only at the end of the period. Right, students? Then beta, there is some problem, beta. Because either under or absorption has to be given in the question. Otherwise, if it is not given, then beta the balancing figure has to be under or absorption. See, beta, one of the sums will have some different treatment. Please don't get affected or carried away by that. Otherwise, your logics will all go haywire. So keep a simple logic in mind, beta. Whatever is the difference, it has to go to under or absorption if under or absorption is not already there. There is a possibility that in the question already under or absorption is there, and then again you are having a balance. Then that balance will be outstanding or prepaid. But if there is no under or absorption given in the sum, then students, you should take the difference in the overheads account as under or absorption only. Correct? Let me just give you one more sums effect. Now, why this sum I want to discuss? Because this sum is showing a net loss. So till now we discussed the sums where balance given was profit. Now the balance given is of loss. See students, I still follow this approach. The only difference is now my hands will represent the balances of loss. And we will keep that in mind and we will decide what is up and what is down. Now what is given? So you are given the net loss as per cost accounts. Also, you are given the net loss as per financial accounts. We will take, let us say, the starting point as net loss of cost accounts. Now, what is given? Factory overheads over absorbed. Again, over absorbed means what? Expenses are more in costing books. Now, if expenses are more, and now we are talking about the balance which is of loss, correct? So, what is the impact on the balance of loss? The loss will increase. So because of overabsorption, now what is the impact on this costing loss? Costing loss is higher. So now we are thinking or looking at this sum, treating these balances as balances Yes, thank you. So students, I was on this point of depreciation. Now, what is given for depreciation? Depreciation. The amount in financial books is 220, whereas in costing books is 245. So first, let us understand it is over absorption. By how much amount? By 25,000. Now again, these are my losses. What is the effect if expenses are more? Because over absorption means expenses more in your costing books. So my costing loss is higher. I'm standing here, I have to come down, so I will subtract. So this difference has to be subtracted. Next. Now next is interest on investment. This is your income. Transfer fees, since it is credited in financial books, this is incomes. Store adjustment, since it is credit, this is income. So these three are incomes. Now these are all financial incomes. Now what is the impact? Now these are financial incomes appearing only in financial books. Now if you have incomes, what is the impact on loss? The loss will be reduced. So because of these three incomes, your financial loss is less. My starting point is costing loss. I have to come down. Subtract. Income tax provided, interest on loan funds, these two are your expense. Again, which expense? Financial expense. Now, what is the impact of this? These are expense only in my financial books. Now, because of this, my financial loss will be higher because these are expense of financial nature only appearing in financial books. So my financial loss is higher. My starting point is costing loss. I will climb upwards. Now, whether you prepare statement, you will not take this as a negative figure. Now, generally in BRS, I have seen that students take this as a negative figure. Please don't do it over here. Here, when you are preparing the reconciliation statement format, take this as a positive figure only. So no need to take it as a negative figure. Keep it as it is. Take it as a positive figure only, even though it is loss in your statement. Now, if you are doing this by the account format, now here, in case of loss, your memorandum reconciliation account, what is the difference? See students, loss opening balance is a debit balance. So you will write it over here to loss as per costing books. Again, I'll write the figure as it is. I will not put it as a negative. See, remember this, whether you are following the statement format, here also you will write the figure as a positive value, or if you are following the reconciliation account format, you will write it on the debit side as a positive value. Now, whatever you have decided as add, all those things you will put on the debit side now. So now all the figures which you have decided as add have to be put on the debit side so that automatically they will get added to this, and whatever you have decided as subtract, you will put it on the credit side so that automatically they will get subtracted and you will get by loss as per financial books. Students, I hope this is clear to everyone. So this is how you do reconciliation statement. In case there is a loss, we follow this approach only. Only difference is we'll consider them as loss instead of profit, and then we will see what is the impact of various adjustments. Students, this is all from my side. I hope you all have understood this all, and I hope both these chapters that we discussed today have been thoroughly understood, and now you will be able to handle the questions which you have from your various materials that are hosted on our POS portal, like past exams, question papers, or the MTPs, RTPs. Kindly refer to them and please practice them thoroughly. So with this, I conclude today's session. Thank you very much, and please practice from all our institute's material available. Thank you. Thank you very much, and very best of luck for your upcoming exams and your preparations. Thank you. Thank you very much. Yes, Manishji. Thank you very much, sir. Thank you. Good day.